Good morning, everybody. It's Richard Muller here doing today's Ichimoku Cloud Chart market review of the S&P 500 Index. I've got the S&P Index up here, S&P 500 Index. And we can see based on the weekly cloud chart, the big picture is the overall bear market remain in place since price action is taking place below the cloud. The front end of the cloud still signal that there is a bear market in place. Interestingly, we had a fantastic rebound here from old cloud chart support levels at 2363. We're now at the bottom end of the cloud resistance zone, so it took some profits off the table for this particular rally. It's a relief rally, a retracement rally, and also it's a counter trend rally because we are buying in a confirmed downtrend as we see on the Ichimoku cloud. But nevertheless, these levels came in very handy for a particular retracement trade or a short-term relief rally trade. We're now fighting resistance here at the bottom end of the cloud, watching for this level here at 2637 to see if this resistance will hold. If resistance holds, we should see the market reverse lower and then resume its current downtrend. And if price action manages to break past this cloud chart resistance, it did have 2 weeks where we tried to get past that level, then we should see this old top here at 2693 as the next target, and then the next target is this cloud chart resistance zone here at, we just highlight that line there, at 2736. So there's still some upside potential provided the S&P can break past this cloud chart resistance at the bottom end of the cloud. So we're at an inflection point. I'm either going to go long or short at this level, either going to buy more to add to the position to hit the top end target, or I'm going to go short and sell the rest and go short for a potential downtrend. Okay, watching the MACD signal here, we might get a retracement back to the standard line or the baseline here. That might be the next potential rebound zone if resistance holds. So these are levels to watch for. 2573 as a potential downside target if resistance holds. And if resistance fails, we can go long and break out. And the next target there will be 2693 and then 2736. But just bear in mind that the front end of the cloud indicates that the bear market remains in place from a cloud chart perspective. The daily chart, here we can see we had that fantastic rebound rally. We then got the MACD buy signal below the cloud, so we are buying counter trend. That was a counter trend trade because price action is below the cloud on the daily, and that's overall bearish. Now we can see we're getting very close to fighting this resistance here. The S&P is now digging into the cloud here. It will be interesting to see if we can break past that cloud chart level, and then we will be coming bullish on the daily cloud chart if price action is taking place above the cloud. So far not. It's still within the cloud. And the targets here is this bottom cloud level there at 2693 is a potential resistance zones, and then this top end cloud level here as well. So watching closely to see if the market can break past that level. If we break past that level, then the upside targets are 2762 and then the resistance zone there, a major resistance zone there. Let me just put that line in there of 2771. Okay, so watching to see what this week's going to bring us, a breakout or a breakdown for the S&P 500 Index. Downside target then would be the front end cloud level here, as well as the baseline here would be a downside target for the cloud in case resistance holds and the sell-off resumes. Okay, so we are at a critical inflection point. Bearish on both charts based on the big picture. But the shorter term is we're at this inflection point. Are we going to break past this resistance on the daily or not? And that's the catalyst that I'm watching out for this coming week. Until next time, happy trading.